Let's get oriented. I'm Lázaro Ulloa, owner and founder of Ulloa Financial, and this is your Market Compass week ahead for Monday, April 6, 2026. Because markets were closed on Good Friday, we did not do a Friday recap. So this morning, we're combining the recap and the week ahead in one clear look at what matters now. So let's get oriented. Last week ended on a stronger note than many expected. Even with all the volatility, the market managed to break a 5-week losing streak. The S&P 500 gained more than 3% on the week. The Nasdaq led the move higher, and the Dow also finished positive. But this was not a calm rally. The rebound came in the middle of a major geopolitical stress, especially around Iran and the Strait of Hormuz, and that pushed oil sharply higher. Prices moved into the $100 plus range during the week, bringing inflation concerns right back into focus. Then on Friday, even though the stock market was closed, the March jobs report gave investors another important signal. The U.S. added 178,000 jobs, and unemployment held near 4.3%. That tells us the labor market still has resilience. So here's the real message coming into this week. The market bounced, but it bounced into a wall of uncertainty. Now let's talk about what could move markets this week. Today, investors will be watching the ISM Services report. Since services make up such a large part of the U.S. economy, this will help shape the conversation around growth and demand. On Tuesday, durable goods data will give us another read on business activity and capital spending. On Wednesday, the Federal Reserve releases the minutes from its March meeting. Markets will be looking closely to see whether more policymakers are turning hawkish in response to rising energy prices and whether the tone is shifting from wait and see to a more cautious stance on inflation. Also on Wednesday, earnings from Delta Airlines and Constellation Brands come into focus. For Delta in particular, investors will be watching not just travel demand, but how much higher fuel costs are starting to pressure margins with oil above $100 a barrel. On Thursday, wholesale trade data adds another layer on inventory and demand trends. But the biggest event of the week is Friday morning's CPI report, and this one could be noisy. Some estimates are calling for a sharp month-over-month increase driven largely by energy prices. So while the headline number may grab attention, the real focus will be on core CPI, which strips out food and energy. That will give us a clearer signal of whether inflation is still sticky beneath the surface. So what am I watching most closely? First, I'm watching whether last week's rebound broadens out beyond a short-term relief rally. Second, I'm watching energy prices because oil is now one of the most important drivers in the inflation story. Third, I'm watching interest rates. If bond yields rise on stronger data or inflation concerns, that could quickly pressure equities again. And fourth, I'm watching earnings commentary because this is where we begin to hear directly from companies about margins, costs, and consumer strength. Here's the bottom line. This market is trying to recover, but it is doing so in a fragile environment. Stronger jobs data helped confidence, but higher energy prices and inflation risk could quickly test that optimism. This week is not about whether stocks move up or down. It's about whether the market can hold onto confidence when the next round of real data hits. And one tip for investors with low risk tolerance. This is a week to stay grounded in your plan. Not every rebound needs to be chased. Focus on diversification, maintain appropriate cash reserves, and make sure your allocation reflects your time horizon and comfort with volatility, not short-term headlines. Stay oriented, my friends, and elevate your legacy.